Hi there, welcome to Dogecoin Wyckoff technical analysis session. So after the previous week and eventful week, this week Doge seems to be a bit more mild in terms of the price movements. So let's see in the weekly and daily charts where Dogecoin is at in terms of the Wyckoff cycle, and also whether there are any particular breakout time points that it's indicated by the price actions where Dogecoin would probably be moving one side or the other. So if you're new to my session, these are the takeaways that you can expect. Basically, I'll cover current and the next Wyckoff stages, key price levels where Dogecoin will find support or resistance, and also any breakout timing indicated by the price actions. So let's dive into the weekly chart. So here we're seeing these two red candlesticks. This time the current week seems to be less violent. The bulls and the bears are basically pushing the price or squeezing it to a very narrow range. So talking about the squeeze, I'm quickly bringing up the Bollinger Band Keltner squeeze indicator. This patch at the back indicates that currently there's a squeeze going on, but then if I switch off the drawings, you see the orange line kind of like getting wider. So as of this moment, it's like, okay, technically speaking, we've got a squeeze, but it may take a little while before the big swing happens for the weekly chart. So we see this squeeze over here, and then this big swing. Likewise here, a squeeze and then bigger swing. So now the momentum is being built up. So it's just a matter of time that we see bigger swings in the weekly time frame. So back to the Wyckoff. Given the fact that the squeeze is happening, currently at this point we can see there's an intermediate support level where the price currently is trading. So if I draw a line, basically starting from April 2021, not 2021, April 21 this year. So if I extend this line across, you see the candlestick that particular week, April 21st this year, and then subsequently early June, early July, late July, early August. These candlesticks indicates there's an intermediate support level. So that's why this week we currently is pausing over here. So previously it dropped quite low to a point where the preliminary support during March and also the PSY period was. So let's draw another line then. So there's another intermediate support level, or it's actually a key level, but I'm using the red over there, so I have to extend it to this side, but rather like overcomplicating the things, I'm drawing these intermediate lines, but you know, these are actually supported by the previous trading activities, indicating this level, the one that we, if I enlarge this week's candlestick, this week we tested somewhere near that particular support line. You can see multiple candles around that level. So you here, these two tops, these wicks, these bunch of candles all indicate that this qualifies as my key level. Just that it's within the long-term playground zone, and it's below the red one, so I haven't extended it to the other side. So we've got those towards the upside, but here we can still take reference. That explains why this week's candle got a rebound from that level, and then now staying above this level over here. So both lines tell us the story why, or explain to us why the price actions this week would end up where we are. There's still 8 hours-ish left. If there are no particular announcement coming out, like crazy announcement coming out, then we'll probably end around this level. So that whatever comes next week will be another story. And in terms of Wyckoff stages, currently I'll say I'll adjust this because it looks like it's going to test towards the downside, like how fearful people are. So it looks to me it has become 50-50 as of this moment. So there's 50% chance for the price to come down for another test, 50% chance heading towards the upside towards the new accumulation distribution cycle. So that's the big picture. Like it's unclear where DOGE is going to head to as of this moment. But then if we go to the daily, there are more indications. Here, definitely there was another LPSY while we are going through this preliminary support stage. I'm going to add a question mark here. I'm going to show you why. During the previous early accumulation, like the one we had back in late May, there was some horizontal movements, even a bit upwards, before the price went to the selling climax in early June. This time we've got a more crazy spike out. It's understandable because back then there wasn't our Friday event, the tariff event, right? So it's understandable the rebound is a bit more violent compared to what we had in June. Likewise here, if we look at what happened back in February, early March, it's kind of similar. There was a bigger dip, and then eventually there was a bigger spike, and eventually that's when the price head towards the selling climax in mid-March. Also, this, whatever happened here, all happened within this downward channel box. Let me change it back to the light blue color to be consistent with all the other charts that I have been showing you. So currently, do we have a downward channel? Let's try. Bring this across, shrink this a little. Just want to make sure I haven't accidentally moved any text or lines. Okay, this, what happened on Friday, was an outlier event. So we don't have to include all the way to the tip of the wake. We just need to take care of what we have recently, including October 11th. Yeah, that's probably about right over here. So this tip, I was adjusting the channel box just to make sure these tips are included. Okay, if you're new to this like playground zone or channel box concept, essentially what's happening is that the prices would trade within the channel, bouncing between the ceiling and the bottom and one more line. We call it the center line or the middle line. The line does not cut the box exactly into half. It depends on how frequent the candlesticks are along like within this channel. So we pick the one where the activities are most frequent, then that's where our center line or the middle line of the box stays at. So we've got this bunch of candles and then this bunch of candles. if I switch it back to the line chart, you see it comes up, got rejected back to the bottom, passes through the center line, comes back, and now it basically is trading around the center line at the moment. Okay, so comparing the two, you see the spike here doesn't even go to the ceiling of the downward channel compared to what we had in March on the left hand side. So it's not too wild. Like initially we think, oh okay, this rebound is quite forceful, but then if we compare what happened just a few months back, like a half a year back, it's not really that crazy. So one more thing here, the selling climax, I should now change it to 50, because in the weekly chart we talk about it's 50% chance towards the upside, 50 to the downside, and probably it's difficult to get an upthrust after distribution with the current market sentiment. So I'll change it just to a second test for the time being and align the probability of it coming to here. Okay, so where is the selling climax then? Back in June, we had our selling climax around this center line of this yellow box. Okay, and then back in March, it's even deeper. It went all the way to the white line. So that is basically the bottom edge of the long-term playground zone, this white box. So if the price really comes down along this downward channel box, let's assume the worst case for now is heading towards what we had on March 11th or 10th. Well, 11th was lower, but then it was a day that closes higher, so give and take, either one. But that's roughly around 14 cents. I don't hope to see the levels that we had back in late 2024 or even 2023. So that's the really catastrophic scenario, like the apocalypse scenario. Let's assume the first point is the 14 cents level for now. So as long as this downward channel hasn't been broken, so if the price doesn't break above this box, it will continue this towards this direction. And interestingly, if I extend this yellow box further, you probably, if you have quick eyes, you are already seeing today and the past 3 days, not only the price has been trading around the center line of the blue box, the prices has also been suppressed by the same yellow line that we have discussed in previous sessions. So this box is basically a trading zone or a trading range in a lot of traders' terms, formed by the selling climax, automatic rally, and also some sign of strength earlier this year, all the way from March to July. So that's what this yellow box is, and the price today and on Thursday both got rejected when they passes through the ceiling of this yellow box. So it's not a common scenario we see this, because the price has fallen to this range. That's why we're seeing a double effect currently on Doge price. So be prepared for the price to come down further. If there is a particular time point, it would be the crosses of the ceilings and the center lines of these two boxes. Let me change this to a dash line also. So here, the price currently is trading underneath this yellow box. So this time point of November 2nd is less relevant as of now, unless the price comes up and trade within this triangle. Then there is a chance for the price to break outside of the blue box when we get closer to the end of this month. But if the price doesn't, if it continues to trade below and probably come down here as well. There are two different time points. Let me extend the center line. So one is this, November 4th, not too far from the one above, and then eventually this November 7th. So within the first week of November, depending on where the price has gone to, there would be certain breakout event that's going to happen. So currently the price is struggling to trade above the center line. By the time we get to those dates, well, actually we've got a closer one, the two center lines crosses near next weekend, but now the price is above the center line of the blue, so it's a bit tricky. So let's leave this for now. Let's just focus on the solid lines instead of the dashed line. So if the price gets to around this or this or this, depending on how it goes in the next few days, right? Eventually, either it's going to break outside of the box, or this is going to break towards the upside of the box, which means it's going to head to a time point near the end of November. But that's too far from now. We still have a month, so we can catch up on this in later sessions. So when that happens, that's when there is a chance for Doge to eventually move outside of this downward channel. Okay, that's the dates when Doge may see the light outside of this tunnel towards the selling climax. But then this is getting very close to where the selling climax should go, really, the bottom edge of the yellow box. So, like I said already, be prepared. The worst may not have happened yet, but even though we say it's the worst, it has happened already just earlier this year, both in March and June, so it's kind of expected. Thanks for joining me for Doge today. See